Oil opened this week in positive territory as investors continue to downplay fundamental factors and bet on the vaccine. Meanwhile, the Russian ruble has stopped its uptrend despite a rise in oil prices and emerging market currencies. The ruble could be weighed down by geopolitical factors. The energy market continues to extend gains supported by the optimism around the COVID-19 vaccine. This weekend, the U.S. Food and Drug Administration issued the first emergency use authorization for a vaccine from Pfizer and BioNTech. This means that the mass vaccination program is about to start in the U.S. The first vaccine shipments will arrive on Monday. Investors' enthusiasm is easy to understand, since the new vaccine is expected to slow down the spread of the infection and thus revive the economic activity. This will definitely lead to a boost in fuel demand. In addition, crude prices are lifted by the news about oil tanker explosion at the Saudi Arabian port of Jeddah. It is reported that a tanker blast was caused by an external source, which may trigger escalation of tensions in the region. Last week, both benchmarks reached their highest levels since early March, with Brent crossing an important mark of $50 per barrel. Today, oil is trading in positive territory after a correctional decline on Friday. Brent oil futures for February hit the level of $50.60 per barrel, while WTI was trading at just above $47 per barrel. Both benchmarks gained more than 1%. Meanwhile, weak fuel demand remains a problem in the short term, as more countries have introduced lockdown measures. Besides, today a new ban on outdoor dining comes into force in New York. This may considerably weigh on the oil prices. At the same time, the U.S. energy firms continue to ramp up production. Obviously, U.S. oil producers are eager to return to work with oil prices holding at $45 per barrel and above. Last week, the number of active oil rigs surged the most since January this year. Notably, traders have already shrugged off the data from Baker Hughes, although they tend to price it in the quotes on Monday. So the risk of oversupply still exists. If market participants focus on this topic, oil is sure to move down. The rising oil prices and the weakening US dollar are likely to keep the ruble afloat. The dollar-ruble pair is expected to settle below the 73 mark after several unsuccessful attempts. In case a positive background prevails, the ruble has a good chance of holding in the range between 70 and 73. The greenback may well retreat to the lower boundary of this channel. Given the current optimistic sentiment in the early Monday session, investors will prefer to buy risk assets. However, the ruble is currently staying in the sideways channel and is showing little change against the US dollar. Despite higher crude prices and a rise in emerging market currencies, the ruble has settled near the level of 73. One of the reasons to hold back the ruble may be the worsening relations between Moscow and Washington. The US suspects that hackers believed to be working for Russia have been monitoring internal email traffic between the U.S. Treasury and Commerce departments. This incident was brought up for discussion by the National Security Council over the weekend. The intensified geopolitical tensions may push the ruble to the level of 74 against its American rival. Some analysts think that the current demand for the ruble is largely speculative. Therefore, it may easily lose its ground amid negative news. The ruble may enter a phase of correction at any time, but so far there are no reasons for a large-scale sell-off. That's all for now. Thank you for watching and stay tuned.